Hi everyone, welcome to the Digital Fifth Fintech podcast supported by Zone Startups and Rise Mumbai. This is India's first Fintech podcast and we'll be releasing content on fortnightly basis. The focus of the podcast would be primarily collaboration amongst Fintechs, banks, software providers and even regulators. Key areas of discussion would include business areas like lending, payments, wealth management and tech areas like API banking, AI, machine learning, blockchain. My name is Sameer Jaini and I'll be your host for the podcast. I run the Digital Fifth, a digital consulting firm. You can call us innovation partners for banks, NBFCs and even fintechs. We help in setting up banks and NBFCs. We help the banks in identifying their digital strategy and then work with them for executing the strategy, including identification of initiatives, identification of fintech partners, software providers. We work with fintechs for partnering with banks and NBFCs. So this is complete reverse. Basically, fintechs also need access to banks and NBFCs. We help there. And we also help in creation of business strategy as well as creation of MVP for fintechs. In the first episode of the podcast, we have as guest Lizzie Chapman, co-founder and CEO of Zestmoney, which is a leading fintech in lending area. We have Vivek Venugopalan, EVP, Digital Transaction Banking, Yes Bank, one of the best bank in API banking business. And we also have Akhilesh Kataria, co-founder and CEO of Quantiguous Solutions, an API banking company. In the first section, we'll be interviewing Vivek and Akhilesh. This will be followed up with a discussion with Lizzie. So starting with Vivek, what are the key use cases for API banking from Yes Bank perspective?
In the banking context, API took off more as an extension of the host-to-host protocol. The existing benchmark in a corporate-to-bank kind of interface used to be the host-to-host environment where files used to transfer from the ERP of the corporate to the bank and vice versa. So we started the first use cases around API banking were a logical extension to that, where we said that there isn't any more need for a file to be aggregated to be transacted with the bank. So as and when at a gross level, if a transaction is able to be originated from the ERP itself, that adds a lot of value to the customer, especially in the B2C kind of space where real time 24/7 makes a lot of difference from an end customer delight perspective. Just to give you a couple of examples, to a very large e-commerce player, that made all the difference in the refund processing program. For that industry, processing of refunds was a very important entry strategy from a customer's point of view, because that helped build up the adoption of buying from an e-commerce site, that even if you don't like what you purchased, it could be instantly returned and refunded, right? So we plugged an IMPS API onto the systems at the e-commerce company, and as soon as the good was received at their end and inspected, they could virtually pay off, and it could be a Sunday afternoon as well, and the customers could truly get instant refund, kind of an example. We also have a certain use cases from the insurance and mutual fund kind of industries, where instant redemption is also again a big deal from a customer delight offering perspective from the mutual funds and the insurance companies, and also helps the customer latch onto such companies. So for example, they have mobile apps which are given to unit holders, and upon their clicking a button on their app, money is instantly loaded against a redemption in these. So to answer the question, the journey began with providing instant and real-time solutions for implementations that already existed. Host-to-host was already happening, but this brought down the time significantly from days to a matter of minutes. So that's how it all started. But then we realized that there exists a whole new plethora of avenues available from a integration perspective itself. For instance, even small things like availability of balances, real-time balances on the ERP, availability of the last 10 or a statement availability on the ERP, or your limits availability on the ERP was a huge value add, because the only other alternative was to either call up a relationship manager or log into a Yes Bank website. And typically in a corporate context, where you typically have several bank accounts, several net banking IDs, and several second factor authentication devices, this becomes a very user friendly and thrifty mechanism to handle this. So yes, that's where we started off from, and we are branching out to other areas in the trade finance, specifically in the cross-border remittances space, where we see a lot of potential for integration. And with blockchain also coming up, we see APIs as a great enabler for that platform as well. And let's see where it goes from there.
Brilliant inputs. Brilliant. I think my guess is that industry is also watching. So I think from their perspective, they should also look at this kind of framework coming up. A lot of banks which are in old world still not waking up to API needs and how they can actually visualize and create new value. So Akhilesh, from a perspective of a platform provider who has partnered with Yes Bank, what's your perspective? What the banks can do, and your perspective on the how key use cases can be enabled faster, better, sharper?
Right. Thanks, Samir. So, a quick background. We have been fortunate enough to, have a very supportive partner in Yes Bank, and our journey kind of started, a couple of years back when, like Vivek mentioned, it was about figuring out how file-to-file transfers can be made, faster and reduce the turnaround time from a couple of hours to maybe a couple of minutes. Primarily, essentially ensuring that IMPS becomes available to our corporate customers. And since then, the method has been, truly remarkable, where, along with Yes Bank, we have kind of met customers of Yes Bank trying to identify what are the most prominent use cases which will give the maximum value for the buck. To pick and choose what really could be the use cases. So what we have seen is, even the simplest funds transfer transaction, be it through an IMPS, NEFT or RTGS, or availability of the account balance, like Vivek mentioned, into the customer's ERP, essentially helps that the information that is used to make decisions by the corporates become available at the point of the decision making, which is essentially the customers' ERP or decision making softwares. It should not necessarily result in a fragmented experience where decisions are happening in the systems of the corporate, but for some of the information and especially the most important financial information, these guys have to go and use portals provided by the bank. So the number of use cases are beyond our imagination. We are just picking up the fundamental blocks of which are available as transactions within the banking portal, making them available in a way in which it's free and open for customers to plug in the use cases that they imagine, which is where we see the power. 18 months, along with Yes Bank, we have seen 200 odd customers, picking up a handful of APIs that we have done. And importantly, it's important to note that it's just still a handful of APIs. And there are already 200 odd customers using them in a variety of use cases which are relevant to their businesses. So a handful of APIs provided by the bank satisfy close to 200 odd distinct use cases, which are really relevant in their businesses, right from refunds to mutual fund redemptions to even, checking whether the details of the account that my supplier has given to me are valid or not. You just do a 1 rupee transaction, and IMPS returns you back the beneficiary name of that account holder, and just a simple check to know, which removes paper-based processes down to a 1 rupee check for your suppliers, makes a huge amount of difference. So these are just innumerable number of use cases which businesses can think of themselves, while the bank has to just ensure that the services that they provide are made available in an open manner to their businesses.
I think pretty powerful thoughts around that. But this is all about what is happening now, right? Which is current context. So one of the point I am having is that how do we visualize the future in terms of getting more value for it? Today what is happening is what was happening in the physical world, and it's getting replicated, right? How do you think that APIs will be able to help and create more innovation around that? We talk so much about BBVA as a concept where their open platforms are coming, or even Fedor Bank. So how do you believe that kind of framework, and any one of you can actually answer that question, which is I'm talking about how do you envisage future and run towards it? Yeah.
So the immediate outflow of this has been the way ERP players are looking at this, right? So though most of our large corporates already have a very sophisticated ERP with them, a close look at it and you would find out that it's grossly underutilized. Some of them admit it themselves. Some of them just want to use it to mimic their existing paper flows, and to that extent are blind to that at the moment. But we see a lot of response from the ERP players itself. For example, large players have come and spoken to us about how we could have a standard SDK equivalent, maybe, where it comes plugged in with certain open APIs. So now that democratizes the process significantly, right? So we know that countries like UK already have open APIs, maybe not for at a transactional level, but one could easily envisage a situation where large corporates seeking standardization drive banks to open up APIs and influence ERP players to make them a plugin into their ERPs, so as to not be bound by any specific bank so much to speak, but it also enhances the value prop of the ERP company also. Another important offshoot which I see in my limited capacity is the advent of newer technologies like blockchain, for instance. Now, I feel if blockchain has to really take over, it needs to have that consortium kind of an ecosystem where multiple players, regardless of competition or otherwise, come onto the platform to make it a big success. So we see a lot of banks already speaking with each other on how this could be enabled. And again, in a standardized environment, the only constant commodity at the bottom layer will be APIs. So sooner than later, we see a lot of APIs getting exposed to the external world. It was so far limited only to the internet banking stroke mobile app kind of a scenario. We'll increasingly see how this will be available in more cross-industry platforms like blockchain or even the ERP paradigm. I see that happening a lot from my perspective. Akhilesh, your take.
Right. So, to add a few more points to what Vivek said, there are three distinct things that we see. One is like sometime back you would have noticed, when the internet banking and the mobile banking started, so people went through use case by use case on why people are coming to the branch. Can I make it self-service, and then can I make it available on the internet or the mobile platform? One track that we see is going to be something on these lines. Every single interaction that a corporate today does, either by calling a relationship manager or sending a paper flow or sending a file or by requiring a deputy visit a branch, would get enumerated, prioritized and made available via an API, primarily with the intent of ensuring that the corporate does not have to leave its ERP to actually execute or effect a change in its financial position in the bank. So that's one track that we see there. Like Vivek mentioned, today while API banking is a platform play for the bank. So today when Yes Bank kind of onboarded 200 odd customers, the incremental effort and cost to onboard a customer on the platform is minimal from the bank side, but on the customer side it is still a significant amount of effort. That's where the play from the ERP providers is a welcome news. So imagine a situation where an SAP installation for India comes with a service pack which says these are 300 touch points in your ERP, all pre-integrated at just the right places with your financial information, with Yes Bank as the provider, will completely eliminate the amount of work that today customers of Yes Bank have to still do to get onboarded to the platform. So that's one side, which is essentially ensuring that the decisioning making never leaves the ERP and financial information can be changed by sitting in the customer system. That's really track one. On track two, what we see is collaboration with Fintechs. There are a huge number of players in the Fintech domain today, especially on the lending side, which are with the sole purpose of ensuring that loans are available to every single borrower which requires one in the country, and they are spending a significant amount of time in the experience and the acquisition space, and at the same time they require us a fair amount of support from various banking providers to ensure that the loans can be booked and serviced. So track 2 where we see is collaboration between banks and these fintechs, resulting in newer areas which the bank now has to start opening up. A simple example could be a KYC or an account opening process, which isn't really that relevant in category 1 that we spoke about earlier, which is about ensuring which is about corporates executing transactions from their ERP. This is about a whole new set of APIs which are to geared towards ensuring that fintechs can onboard newer relationships to the bank. So what would be the use cases in those areas? As the banks partner with these categories of fintechs, we see these discussions happening. And now with the API platforms in place in banks like Yes Bank, instead of these being done as bespoke projects, they are getting identified as the next set of APIs which will be made available on the platform. So that's like category 2. Category 3 is even more strategic. It is about saying that come 8 years down the line, as ubiquitous as my branches would be my APIs, is the view that some of these banks are now starting to take, saying that come 2025 or 2023, each and every function of my bank should be made available through APIs, ready to be integrated with either partners or customers or regulators, with an attempt to significantly drive up efficiency and ensuring that the bank is ready to participate in the API economy as we speak. So that's my perspective.
Thanks, Akhilesh, and thanks, Vivek. I think one of the typical question which we get asked is what will happen. I mean, from an API banking perspective, will it generate revenue? Will we get more profitability if we get it? So, rokada kahan hai? Where is the money, right? So, this question I keep getting asked this question. So, Vivek, from your perspective, do you think that API banking itself will create revenues as well as profitability to the bank? And I'm talking about not just now, maybe in going forward perspective.
That's a really interesting take on this, because prima facie, when we began, we looked at it as an alternate channel to a business which was already existing, and quite a lot of the necessity to jump the bandwagon was to differentiate ourselves in the market, right? For example, when there are 4 or 5 banks eyeing for the same pie of the customer's business, the only reason why someone would look at us being the youngest, until very recently being the youngest bank, the only reason they would look at us is what new or what different, right? So that was the perspective from which we got into this. But as we get into it, and as we have onboarded, as Akhilesh was mentioning, we have already onboarded 200 odd clients and counting. What we have realized is that the incremental cost of onboarding a customer is gradually declining, right? So it has also brought about this change in mentality at our end, that whenever a new service or product is being launched, we are thinking API first now. Because that from a P&L perspective also is very thrifty for us, because the very critical element of UI UX development, which typically takes up a lot of your bandwidth in terms of cost, time, testing, and so on and so forth, is completely eliminated here, right? Quite a lot of control from the InfoSec perspective is also passed on to the client's end in terms of his own user authentication, second factor authentication, and stuff like that, right? It moves on to the client end. So we see that as a beneficial proposition for us from a cost perspective as well. There are so much so that some of the if we are able to bring down the churn of onboarding a customer or consummating one process life cycle. So, for example, in a supply chain case, if you are able to turn around the whole process in a shorter period of time, that brings to us a lot of benefits in terms of lesser manpower used at the bank. For instance, let's compare this vis-a-vis a simple setting up of a net banking case, right? Because that's a very comparable solution in the sense that I want to do a lot of payments every day. So either I give you net banking where you can upload bulk files, or I give you API banking. Now, if I were to do it, so API banking, I'm able to set up a customer in 10 days flat with virtually zero paperwork and no operational person involved. But from a net banking perspective, I have to have a form filled in with him, which that needs to flow to me through multiple hands. There are discrepancies and so on and so forth. Then an operation team sits through it, and there is a maker-checker process to set up that customer online. Then there is a process of sending him a password. Then a second factor authentication needs to be set up on him, and then he actually starts transacting. So the time taken by which I can get him to transact, and the effort ensuing in terms of number of people involved in the whole process, the points of failure are multiple. Here we are able to turn it around almost without operational interference at all, the setup part. And transactional being, of course, since there is no movement of files, and therefore the bandwidth required in setting up, SFTP folders or file transmission kind of paraphernalia around it is completely eliminated. And the more complex the use case gets, the better it gets. And I think the biggest offshoot for us has been the ability to think API first, so as to try and offset some of those cases, actually.
Right. So just a couple of more points to what Vivek mentioned. Uh, uh, so there are three there are three aspects to this. One, the entire API banking platform that's kind of co-created with Yes Bank is built on three principles. One, it's reusable. The second, it's really aimed at simplification for the consumer, and the third is it is about consistency. Now let's just go quickly through them one by one. So what do we mean by reusable? 200 customers in a small period of time getting onboarded with an incrementally low customer acquisition cost for the Yes Bank side is the primary business benefit here. It is not an interface which is done on a per customer basis, per use case basis. These are APIs well thought of, created in a manner in which it can be consumed by a large segment of customers for a large number of use cases, be it corporate customers which are trying to do it for CMS, or a fintech which is trying to get it through a acquisition channel, or even participating in the larger banking as a service where the entire bank is getting opened up. The API that you create today caters to a broad spectrum of use cases. The second one is about simplicity. Each bank has an innumerable number of complicated systems in a mishmash of integrations. The core banking being central, you have a UPI switch, you have an IMPS switch, you would have a origination system, you would have a whitelisting system, you will have a document management system. All of these systems have their own levels of maturity in the interfacing capabilities that we provide, and the intent of the API layer is to ensure that all of this complexity is hidden from the consumers, making it significantly faster for the customers to get onboarded and start using these APIs. Point number 3 is about consistency. The simplest example that comes to my mind is funds transfer, right? So over the past 18 months that the funds transfer API in Yes Bank has been live, it started off with IMPS as the primary segment, and now most recently it is about adding on UPI and ABPS as different transfer modes. So a single payment API which is about transferring money from a remitter to a beneficiary consistently provides an experience across different payment modes. So if the APIs are well thought of, this goal is also met in the platform.
Absolutely, I think this is good idea about that. So one, I think maybe a very awkward question right now, just to say that we talk so much about digital strategy, and there are a lot of thoughts around that. A quick question on this is that, do we need an API strategy?
I would imagine so, yes, because the consistency part which Akhilesh was referring to some time back it becomes kind of a precedent which we have to play by, right? So if, for example, if I have a customer on board, for instance, on cash management systems, and I have been able to provide API banking kind of services to him where he is able to operate on all modes of transactions in a domestic scenario, ranging from payments to a bank account holder in the form of RTGS, NEFT or IMPS, to an unbanked person in the form of loading a prepaid card or a instant money transfer, a cardless cash withdrawal mode, or offshoots of that in other payment modes like ABPS and UPI, for instance. And he's also a trade finance customer of the bank, where I tell him, okay, for trade finance, this is not what is in store for you. You have to go the old way. That doesn't speak much about the consistent experience for the user. So it is important for the bank to frame a strategy around the whole thing. Now that it has gained so much of traction and user acceptance and adoption, it is incumbent on the bank to ensure that he gets a similar experience across all the services which we offer to him. So trade finance is just one. There are foreign exchange related transactions. There are interactions which are not necessarily transaction related, but maybe we need to keep renewing the KYC of the authorized signatories, for instance, in the corporate context. We need to add authorized signatories whenever there is a requirement for that. Can these be handled through APIs? Eventually we would like to be driven to a situation where the customer is extremely tough on us and demands everything to be handled through API. Of course, that's a good problem for us to have, and which is the need, and so that we are prepared for such things and are proactive about it. It's, I think, imperative that you have a API strategy in place.
Right. From a solution provider perspective, a few points to add. Before the API space, the banks were typical consumers of technology, and they were, asking a few set of questions to their technology providers. How do you manage versions? how do you ensure that your software is tested? How are you going to take care of me, in terms of sustenance? Where is the documentation, and how do I understand what the software does? In the API space, the bank is now transforming from a consumer to a provider of technology, and all of these questions which the bank today is comfortable and mature enough to ask a vendor has to now start finding answers to. And being a cross-cutting domain, like we touched about before, that there would be anywhere between 25, 30 to 100 plus systems in a bank. This and a consistent interface like what Vivek mentioned, which customers have started expecting, irrespective of the backend system that provides it. So it is truly a cross-cutting strategic initiative that the bank has to embark upon. It cuts across nearly all systems that the bank today has, and it requires the bank to now start answering questions which today they've been used to only asking. The other real point, from real life experience that you have seen is any small blip in the systems of the bank now are transparent to the customers of the bank, which results in a different kind of conversations about how do I manage the relationship, how do I ensure that my systems reach a specific level of optimal performance, and any disturbance in my side does not really impact my customer. So it's relatively a new area, cross-cutting a large number of systems in the bank with a significantly new kind of transparency coming in, where now your customers know exactly the health of your systems because they are directly connected. All of this requires a central strategic body to be really involved in this. So while we started this as a CMS corporate banking initiative to get quick adoption in the market, we are seeing that as this grows and gets more widespread, the need for a strategic organization is becoming very evident.
Brilliant. So basically we are saying banks have become real tech companies with a banking license, right? So this is what it looks like. So I think when we talk about this platform and we talk about API banking, I think most of the banks are still not able to envisage what's the next thing, right? So very few guys have moved on this area. I'm sure there are challenges on the management side to just understand the perspective of what API banking is all about, the frameworks around that, maybe the org structure itself, right? The KPIs. So now when you put up an API banking, what is the KPI of that, right? You can't say that I have launched this, but then what? Do you need different sales process? Do you need different kind of people to leverage it? What exactly are the challenges and the enablers for making this happen for you?
There are multiple dimensions in which a bank needs to look at this. One, as you rightly said, is the sales part of augmenting API banking, right? So typically the corporate sales organization has been brought up selling a particular type of product to corporates. A product which could be shown to them. There used to be these demos which could be done to the client. For example, if it's a net banking portal or a product or an app or something, there was a process by which a formal demo used to be shown to the customer. Now, how do I demo API banking to you, right? I mean, I have deployed it elsewhere, though we have found mechanisms to do that, thanks to Akhilesh. But that is one element, right? Your sales force nearly needs to be trained and attuned to API banking, because that to my mind requires a bit of differentiated skills, because it's not just being about being technical or technically sound to sell APIs, because you're going to be speaking about APIs to the CFOs and finance function people. So you'll have to find a way and a mechanism to explain it to them so that it makes sense to them, right? For instance, we very often give examples of Google Maps and how it empowers a website in which you are logged in to find out where a particular restaurant is, or how a map enables radio cab service, and you replace radio cab with your ERP and Google Maps with our core banking is one way in which we try to do that. That is on the sales front. So there is a training orientation required to handle that part. Secondly, typically technology departments in banks are aligned as per the application which is supported. Right now, that is because of the fragmented manner in which the customers used to be held. Right, for example, trade finance customers are handled by a particular team who handles the trade finance core banking application. CMS and other functions are handled by another team which handles the general banking part of it. But what API essentially does is transcends that gap, right? We are giving this across the group. So there is an urgent need for a cross-functional matrix organization to emerge out of this to support APIs across the bank, right? Because if you let the respective application teams come up with their own API definitions from their respective application vendors, you're going to end in a utter chaos, because you already have come up the curve in terms of understanding it from one system. So that needs to be the basic governance model through which you generate APIs across the board. So at technology, there has to be a big time convergence. I don't know if that's the best solution for this, but there has to be some convergence at a strategic level wherein a central guideline is available to all different application teams, because no longer is the customer stuck to a particular application for a particular use case. Here we are taking away the application or a front end from him entirely, and we are exposing it to his ERP, where he is the end user for everything that is available on the ERP, and we are just the consumer. It's like an electric wire, right? He just knows that I have to put this plug on or switch this on. He doesn't know where this wire eventually switches at the bank end, right? So to that extent, it is essential to converge here, and then sales training, as I was mentioning, is an important element.
I think we've got amazing insights till now. Before we close, quick remarks from both of your side. What is lying ahead for us in API banking, and stuff which you want to talk about?
So again, from two dimensions. One is, as I mentioned earlier, we want to broad base the number of services which we have made available to the customer. We want to really ensure that APIs are available in every interaction which a customer has with the bank. That is one dimension. And on the other dimension, we want to make the onboarding as simple and user friendly as possible. So we are trying various ways and means through which he could subscribe to a service online. He could the installation could be handled online without the need for a specialized sales force around that. How we could provide them with certain consoles where they could not only have a bird's eye view on the transaction, but also give that IT team insights into the connectivity related issues, if any. And it all helps in the self-service mode, because the governance model around having a call center at the back end to support an API banking is kind of beats the very innovation, right? So we are also trying to see how those kind of enablers can be made available to the customer. So I was mentioning earlier about how a plug and play with ERP players seems to be a great multiplier opportunity for us. So to that effect, SDKs being available, which could link in with different languages, could be and I see that happening sooner than later, and that would be a great enabler in terms of both the efficacy of the product and also the adoption rate. You will see that once the effort at the customer's IT team is reduced, adoption generally leapfrogs. Akhilesh.
Thanks. Thanks, Samir, for inviting me. For us, we are really a 3-year-old company, right? Completely bootstrapped. Started in 2014. Saw an opportunity in the API space. Got lucky with supporting banks, RBL and Yes Bank, to help us co-innovate and co-create this product. And I think we're at the right stage where we have a ready solution, which is production tested, is handling the volumes that these banks are now seeing coming in through the APIs. And for us, the next few months and the coming year is just about scale. Ensuring that more and more banks are able to offer this channel to their customers is our primary goal number one. We have a second goal. We are kind of partnering with like-minded people like yourself, trying to figure out the pain points of the fintech community in India, and ensuring that we kind of create ready to go packs. For example, we would start with lending as an example, and create all the necessary taxonomies which all of these lending startups require, and then go to each of these banks, ensuring that their backends are connected to the taxonomy that is required, ensuring a significantly smoother onboarding process for the fintech side. So we're kind of looking at working in both places, work with fintechs and work with banks to kind of get this API economy kick-started in India. Thanks, Amir.
Thanks, Akhilesh, and thanks, Vivek. I think API economy per se is going to grow exponentially. My perspective is that in next 5 years we should be looking at 50% of forward-looking banks revenue to come from this framework. This is not a gut feel. I firmly believe the framework is going to help over a period of time. If you look at it today, KYC, eKYC is an API, nothing else but an API. UPI platform is nothing but an API which is getting used. IMP is an API. Even when you talk about CIBIL score is an API, right? So if you look at most of the platforms are already running as API. NSE itself is exposing APIs which are used by various brokers. So there's already economy which exists out there. It's not never called like that. Even the ATM framework, the way it is worked, when you use somebody else's ATM, it's an API which is called ISO message, whatever it is, but it is getting used. So there's a lot of focus as we see going forward. Most of the banks will expose almost all their framework, be it lending, which is credit score framework, or be it about investment, be it about savings, be it about anything in the banks will get exposed. We need to ensure that happens rather quickly, and which is also done in a bit of a control as well, because if without control the risk will increase and suddenly you will see issues coming up. If you don't understand, you will have a challenge in executing it. So my perspective, future is bright. I think we need to just focus on it and make it happen. Thank you guys.
Thank you.
Today we have for API banking, from a user perspective, we have Zestmoney here, and we have Lizzie from Zestmoney, who has founded this company and working very closely with multiple banks. So Lizzie, from your perspective, I think first give us a quick background about your company, what it does, and talk about what are the activities you do with them and what kind of use cases are coming up on API banking side.
Sure. Okay. So Zestmoney is a new consumer lending platform. We integrate with e-commerce companies who are our partners, and we enable on the checkout the creation of an EMI for their customers who are predominantly new to credit. So we cater for customers who do not have a credit card, but we gather alternative data about them and make a credit decision on the fly, and then disperse a loan within a few hours to our partner, the e-commerce company. So we are a technology company, first and foremost. Our expertise is in payments integration, payments processing, credit scoring, and loan management. What we don't do and don't want to do is run a balance sheet, because, as you'll know, India is one of the most expensive cost of capital markets in the world, and having a cheaper cost of capital is a great advantage in a lending business, obviously, and therefore we try and partner with some of the biggest and best NBFCs and banks in the country to utilize their balance sheet and their regulatory discipline, and we just do the tough bit, which is the technology on top that allows us to partner with the e-commerce companies. It's a great use case for the bank. It allows them to access a completely digital customer who is very comfortable with a digital onboarding process, and it also allows them to offer loans to customers they would not normally feel comfortable lending to, and at a ticket size that doesn't make economic sense for them normally based on their existing practices. Because we have completely automated and digitalized the entire end-to-end process, we can write a loan at a ticket size of 5,000 rupees and it's still economical.
Okay, brilliant. And so right now when you're working with so many of these banks, what are your thought process around how they can help you in onboarding, and what is the typical life cycle of you working with them? So kind of ideas about the challenges as well as positive side. Yeah?
Sure. So I said it's great timing. The good news is it's very easy to create these relationships with banks right now. Every single bank needs to have a digital agenda and strategy, and they're all really desperate to get access to the type of customers we bring them. So that's the good news. We always get a great reception. We normally start by working with very senior people at the bank who will take us seriously and get very excited about the product. Normally there's some digital champions within the bank who are fantastic and can see the vision of what we're trying to do and how it will fit within the bank's strategy and infrastructure. But then we go through a series of processes to get the product kind of signed off and integrated into their business unit. And that's when we sometimes face some challenges. And they can be on the kind of operational process and regulatory side, getting internal compliance sign-offs, for example. Those we can normally win. They haven't been blockers to date. But I would say things like how they create an account on their side. So this is at the interface of process and technology are where we find the real challenges. And they can be no-go, actually, for our integrations. So we have had some success, but not as much as we would like at this point. And that's probably because the technology systems that they're working with on their end are not as flexible as they would need to be able to very quickly pilot our product. That's my sense.
So you mean to say that from a compliance side or operations side, maybe they have to change their frameworks. Maybe they have to start accepting digital as a channel for enabling the customer.
Sure.
I think if the entire country is focusing on digital, I think there's an idea about how we can accept. There are many rules of RBI which are supporting that as well. So I think that's an area which they can work on. Yeah. But just from a scaling up side, just quick question. I mean, today, if banks are not supporting it or maybe not able to support as fast, do you think that it's an issue of scale? They don't see a huge value coming out of it on an immediate basis. Do you believe that in next few years, maybe 30-40% of their balance sheet will be coming through these frameworks?
Wow, yeah, those are big numbers. I think you're right. I think that's exactly the problem at the moment. We're in an impasse where we all know with some certainty that the future is digital and that there will be a significant percentage of acquisition in the future will come from these digital channels. But quite honestly, the volumes today do not support that hypothesis. And so it's a little bit chicken and egg that the banks are not quite ready yet to invest in the framework that would be needed to help scale these platforms. But meanwhile, the platforms need that investment in order to scale. So the challenges we've had, for example, having to replicate the digital onboarding process with a paper-based process very much limit the scale that we can achieve with our product. But as I say, the bank isn't willing to invest in that digital process until they see the volume coming through. So it's this vicious circle that someone needs to break, and we'd love to know how to do that. The good news is, though, you're right, the government and the regulatory framework are so powerfully and strongly in the direction of digital. That's why I say on the compliance side, we're normally confident we can win these arguments. So eKYC is a great example. Even 12 months ago, when we were talking about doing biometric eKYC, there was a lot of pushback. It was still not believed it was completely robust, etc., etc. Now that's almost gone away, and especially with OTP eKYC, banks are actually willing to try it because the infrastructure and investment is even lower. So we can very easily get that live. The problem is they then often want to back that up with some documentation as well. So it kind of defeats the purpose of investing in the eKYC, if that makes sense.
So that was about a mindset issue, I think, which has to change. From a bank's perspective, where should they invest? Should they go for another alternate core banking platform which is digitally ready, or do they need to apply a layer in between, or do you believe there is a need for different players to come in between to remove this friction which exists today? So thoughts around that?
Yeah, it's a good point. I know a little bit about core banking systems from some work I did previously for a bank, and it is hard to imagine how, given the way they have been built over the last decade, how they will be able to very nimbly process the amounts of data and information that we want to pass to them. So just to give you a sense of that, the way we work is we will send the bank up to 2,000 individual data points on an individual case, real time, that needs to be computed, assessed, and a decision spat out real time. And our understanding from the banks that we've worked with is that's quite challenging within the infrastructure that they have, and therefore they're using, a loan management system on top of that, or a decisioning software on top of that, and then a human, layer on top of that. And so this kind of layer upon layer upon layer might be a challenge, or at least from a philosophical perspective, that they need to still fit every single loan that we send them within that architecture. I think what we might have to see is more of a kind of hack approach, like you see in the US, and you actually see this even in the way we work with, for example, the wallets in this country, where they create a master structure with like sub accounts. Could we, for now at least, create master accounts for each fintech, and then have a much more nimble infrastructure underneath for account creation of the sub accounts? The problem is a lot of banks here have been sold the cross-sell story. So they're very keen to use the fintech to onboard a customer and then cross-sell him other products, which is why they're quite wedded to the traditional account creation process. If we can convince them that the fintech account on its own has enough value and good enough economics, maybe then they would philosophically get over that mindset of having to have this one central account. That might be the challenge. What do you think?
I think cross-sell KPIs may not go away. So if you think that they will not go for it, I think they will, because I think over a period of time, I think consultants are also telling them to increase that ratio. So that will not go away, I guess. So any closing remarks in terms of what's your view in next 2 to 3 years, 4 years, how the market will look like, and what kind of investment, what kind of process, what kind of people change will be required to make this kind of framework successful?
So as I said, it is a vicious circle. I think we need to turn it into a virtuous circle. We need to put the onus on the fintechs as well to make the case, and we need to see a few breakout success stories. We've seen a couple in the SME lending space particularly, and then obviously in the payment space. But in my area, consumer lending, the companies are still extremely small, micro scale. No one has a proven track record, and I think we need another year of performance and investment from equity investors, unfortunately, to prove out some of these business models, prove that the economics make sense, and that scale is possible. And then only then, hopefully, we will see additional investment from banks. At the end of the day, they're not stupid. They're not charities. They're not going to do this just because a prime minister has told them to. They need to see a business case, and we need to make that business case for them. So I think the onus needs to be on the fintech community and startups like us to build sensible, profitable businesses, and then create that alignment, right? The best partnerships can only be win-win. So there has to be an alignment on both sides that we can build a real business out of fintech.
Thanks, Lizzie. I think good insights, valuable insights, and going much beyond the hype. Thanks, Lizzie. Thank you. Thank you.